On June 18th, Senator Bernie Sanders introduced the American Artificial Intelligence Sovereign Wealth Fund Act, which proposed a 50% tax on the stock of the largest AI companies in the country to create a $7 trillion public fund. His argument is essentially this: AI was built on the collective knowledge of humanity and the creative work of tens of millions of people. So its returns shouldn't flow only to a handful of billionaires or even trillionaires. Whether the bill passes is sort of beside the point. The movement it reflects is really already shaping how workers across industries view their company's AI direction. The context is that more than 142,000 US tech employees have lost their jobs in the first 5 months of 2026, while a small handful of the largest tech companies reported their strongest ever financial results and committed over $700 billion to AI infrastructure projects. The gains are visible. The distribution of those gains is visibly unequal. And the question is whether they should be equal. Sanders thinks they should. He's describing a macro level problem. But the same question may be living inside your own organization right now. Who's capturing the value your people are creating, especially with AI, and what's the expectation for sharing it? PwC's 2026 Global Artificial Intelligence Jobs Barometer analyzed over 1 billion job ads across 6 continents. It found that the companies generating the biggest AI productivity gains are using the technology to amplify human performance, and that's resulting in raising wages as well as expanding headcount. Productivity growth at the most AI-exposed companies is running 40% higher than their less exposed peers. The companies achieving the biggest gains are treating AI as an amplifier, compounding the value of their people's judgment with every deployment, not necessarily replacing it. And that distinction is more important than it might first appear. The data you're feeding your AI models most likely came from your people. While you might be using AI to analyze market trends or integrate third-party data, your people are the ones making sense of that information, sharing ideas, and developing insights based on their past and current experience, and ultimately making decisions based on what the AI is producing. Human experience and knowledge is the raw material of AI. Your people deserve to understand that and potentially benefit from it, according to Sanders. If you want to do this, here's how to translate this into practice. First, share AI gains. Companies running AI gain sharing programs where employees receive a percentage of documented savings generated through AI tool use see far higher adoption rates than those relying on mandates alone. It's no different from delivering bonuses tied to revenue targets, for example. When people see a direct connection between their AI contribution and their own outcomes, adoption then changes and accelerates. Second, make the value visible. If your people can't see AI making the company more productive and profitable, second, make the value visible. If your people can see AI making the company more productive and profitable, but can't see how it's improving their work or securing their own future, a motivation gap's going to emerge. So quantify AI benefits, show results, and tell stories that bring the value of AI to life for the company and for individuals alike. And then protect the judgment layer. Capture and leverage the accumulated experience or judgment your people bring to AI deployments. Identify which people possess deep judgment based on years of experience. That would include pattern recognition, strategic thinking that really no model can replace in the context of your own business. Elevate those competencies to the forefront of your hiring and your talent development strategy, so people gain new skills that advance their career trajectory and the company's competitiveness at the same time. Whether the Sanders bill goes anywhere, the pressure it reflects is building and real. For example, California Governor Gavin Newsom has floated the idea of universal basic capital basically giving workers direct ownership stakes in AI productivity gains. The companies that get ahead of this trend will navigate it on their own terms. The ones that wait may need to react under external pressure. Here's what to do this week. Ask yourself, when your team looks at your company's AI strategy, do they see a tool designed to make them more valuable or one designed to make them replaceable? This week, have one honest conversation with a senior team member about how they experience your AI direction. And listen for whether they feel like a beneficiary, a cost center, or a cog ready to be disrupted. Your people are currently the variable in your AI strategy that creates competitive advantage. Whether you agree with a sovereign wealth fund or not, that fact's worth acting on. That's the reframe, so you can leapfrog the headlines, your leadership, and your business. Subscribe so you don't miss the next one, and find me at sorenkaplan.com.